All right, so I'm going to talk to you about the Maryland inheritance tax and why it's the worst tax that ever existed. And it's got nothing good about it, so I'll tell you that we should repeal it. So first of all, there's a difference between an estate tax and an inheritance tax. So an estate tax is going to tax the estate that gives the inheritance. The inheritance tax taxes the recipient of the inheritance, right? And that sounds like the same thing twice, but actually the two different structures lead to certain results, and in both cases, it makes the inheritance tax less equitable than the estate tax. And so one of the reasons why is because the estate tax is only reserved for the largest estates, right? So only the richest people that die pay any tax. But the inheritance tax can be on an extremely modest inheritance, right? So it's not on the wealthiest. The second thing is that the inheritance tax exempts certain family relationships, and that feature is basically absent from the estate taxes. So for the inheritance tax, close family relationships don't pay any tax at all. And that may sound fair, maybe to you, but I'll show that it's really not. So when people talk about the death tax, they're talking about the federal estate tax. They can also be talking about the state level estate tax, but they're talking about the estate taxes, and the estate taxes are different than the inheritance tax. The inheritance taxes are much older than the estate taxes and much less fair. So Maryland adopted the Maryland inheritance tax in 1845, but the federal estate tax wasn't adopted until 1916, and then the states didn't adopt their estate taxes until basically after 1926. In 1924 and 1926, there was an issue where everyone was afraid that the inheritance taxes would have to go away because the wealthiest people could just go and die in Florida, which Florida didn't have an inheritance tax. So the states were worried that they would be forced to repeal their inheritance taxes so that their wealthiest people don't all leave the state. So Congress created a credit to the federal estate tax for state death taxes paid up to a certain amount. And so this meant that the wealthiest people would pay the same amount in death taxes no matter which state they died in. So that protected the inheritance taxes, but also created the state estate taxes. The state estate taxes were only there to use up the rest of the maximum state tax credit, because it's basically free money for the states. As long as they tax up to that certain amount, it doesn't increase the tax burden on the wealthy person who died, but it increases the amount of money that goes to the state instead of to the federal government. And that's basically the state of things for about 80 years until very recently, in 2001, the Bush tax cuts basically took away the state death tax credit, replacing it with a less generous deduction. And with it, most states let their state estate taxes phase out. So there used to be that just about every state had a state estate tax. But now only, I think, 12 states have a state estate tax. And also between like 1970 and today, most states have repealed their inheritance tax. Usually in favor of just keeping the state estate tax. And so there are only 5 states left with a state inheritance tax, when almost every state had one. Okay, so the inheritance taxes existed before the estate tax, and were kept alive by the state death tax credit. And then with the repeal of the state death tax credit, then most state death taxes have gone away entirely in the United States. So what is the Maryland inheritance tax? Okay, so it's going to be a 10% tax on all the stuff that you have when you die, no matter how you give it away, whether you give it in trust or directly, or if you have a revocable trust, that's going to be taxed at the 10% rate. But most people don't pay the Maryland inheritance tax because as long as the inheritance tax is going to certain family relationships, then there's no tax at all. And so most people don't have to pay the tax. It's exempt if it goes to the spouse, registered domestic partner, which is a spouse-like designation that's new. It's exempt if it goes to a child, adopted child, stepchild, former stepchild. It's exempt if it goes to the spouse, surviving spouse, lineal descendant, spouse of a lineal descendant, and surviving spouse of a lineal descendant of a child, adopted child, stepchild, or former stepchild. It's exempt if it goes to your parents, grandparents, siblings, half-siblings, or if it goes to a nonprofit. Life insurance, up to $50,000 of probate assets, and up to $1,000 to any one person are exempt. There's lots of other tiny exemptions because it has a long history, and this tax has never been popular, so they like to make little exemptions everywhere. Okay, so what's wrong with the Maryland inheritance tax? Okay, so the biggest issue is that if you're only taxing people who do not have recognized family relationships, right, then it's effectively discriminatory against people who do not have those relationships. And this is not like other taxes. So in particular, the inheritance tax is effectively discriminatory against people who do not get married or do not have children of their own. So if you get married and you die and leave everything to your spouse, there's no tax. But if you die and you have a partner that you're not married to and you leave everything to them, there's a 10% tax because you did not get married. Asterisk. So there's a registered domestic partner, which is an option for non-married people. But almost nobody knows anything about the Maryland inheritance tax, and so they don't know that they can avoid it simply by filing this piece of paper, right? The people that get married do not get married to avoid the tax. So it's not equal. It's not neutral in who it applies to. Non-married people are going to have to pay the tax because why would they have known about this obscure bureaucratic election, whereas married people automatically get that benefit? This is also not like in income taxes, there is a tax benefit to people with minor children, like the earned income tax credit, the child tax credit. People who have a family with minor children pay less in income taxes, and that is a good thing, right? Certainly discriminatory in a certain way, but the purpose is that childhood poverty is bad for society. That if people grow up poor, they have lifelong bad outcomes. And we can combat that by giving a tax credit to people with minor children. That's different than the inheritance tax. The inheritance tax is about somebody who's like 80 years old, has a bunch of money, and they give it to their 50-year-old child who's lived their entire life without this inheritance. You know, they don't really need it any more than anybody needs anything, right? But that person is taxed none at all. Whereas someone else who's 80 years old and doesn't have children of their own, they leave their extremely modest house to their niece because that's the closest relative they have, and their niece has taken care of them all these years. That person pays a 10% tax on the value of the house they receive, even though it's very modest, right? And the reason that they are taxed and the other person is not is not because they don't have a close relationship. It's not because they're so much richer. No, it's simply because one person did not have children, and so their heir is their niece instead of their child. Right? So it's really discriminatory based on who is your family and whether the law recognizes them as such. So one group that is particularly vulnerable to the inheritance tax are LGBTQ people, because they're about half as likely to be married and substantially less likely to be parents. There's also evidence that the inheritance tax favors native white families over non-white families or immigrants, because non-white families and immigrants are much more likely to have a multi-generational household, and so they're more likely to have kind of stronger familial ties outside of their nuclear family. Okay, so that's the main issue with the inheritance tax. But it doesn't get any better. There's really nothing good about this tax. So the second big issue is the inheritance tax falls heavier on people with less wealth, not more. Right? It's not even equal. It's heavier on people with less wealth. And there's three reasons for that. One is that the Maryland inheritance tax counts as a tax credit against the Maryland estate tax. So somebody wealthy enough to pay the Maryland estate tax, if they accidentally pay the Maryland inheritance tax, it costs them nothing, because every dollar against the inheritance tax is a dollar less that they pay on the estate tax. So it doesn't cost them anything, right? The wealthiest people pay nothing. The other two reasons, the valuation methods favor the wealthy. I won't say any more about that because it's kind of technical. But the third reason is that the Maryland inheritance tax is extremely easy to avoid if you have the money. And so people with money can hire a lawyer who's going to fix this problem for them. That they can just hire an estate planning lawyer who will avoid this tax altogether. And it's quite easy. So the tax is also arbitrary. First of all, the family exemptions are not some objective list of what family relationships are most important. It's just whatever the legislature felt like was important. That's it. There's nothing objective about it. If you leave an inheritance to your brother or your half-brother, no tax. If you leave it to your stepbrother or your brother-in-law, 10% tax. If you leave $50,000 of probate assets, there's no tax. $50,001 of probate assets is a $5,000 tax. Life insurance is exempt, but if you gave the same amount of money through some other vehicle, through your bank account, whatever, the life insurance has no tax, but the bank account does, even if it's the same amount of money. If you left $50,000 of non-probate assets, $5,000 tax. $50,000 of probate assets, zero tax. All right, so let's say you have cash that's in another state, in a safety deposit box, whatever. That is not taxed by Maryland. If you have a bank account in another state, that is taxed. Let's say you own real estate. Let's say you live in Florida, but you own real estate in Maryland. That's going to be taxed. But if you live in Florida and you own an LLC that owns that same real estate, no tax. There's also sometimes you can use a disclaimer to completely avoid the tax. If I left a house to my sister and my brother-in-law together, that would be subject to a 5% tax because half of it's going to someone subject to the tax. But if he just disclaims the tax, it all goes to my sister, and they're going to own it together anyways, so it just avoids that tax. No problem. The inheritance tax is also extremely complicated because it's so old, and it was not made for this century. It wasn't even made for last century. And this is shown most absurdly in how it interacts with the estate taxes. So the Maryland and federal estate tax are a deduction against the inheritance tax. The inheritance tax is a credit against the Maryland estate tax. And then the inheritance tax and the Maryland estate tax are a deduction against the federal estate tax. You have 3 taxes that you're paying when you die, if you're a really wealthy person. And they all depend on the other. And they're paid to 3 separate government agencies. Okay, so if all of that wasn't enough, there's very little mechanism to enforce this tax. If someone avoids probate entirely, meaning it all goes through trusts or certain other vehicles, there's nothing to even notify them that they're supposed to pay a tax, let alone anyone forcing them to pay such a tax. Okay, so you might be thinking, but certainly, all this revenue that we're generating, that would be hard to live without. But it's not. So the Maryland inheritance tax brings in around $80 million per year. And that might sound like a lot, but the total budget for the state is something, the total operating budget for the state is something like $60 billion. So we're talking about 0.12% of the state's operating budget. Just to illustrate how small of a number this is on the scale of the whole budget, and I'm not advocating for this policy, I'm just trying to illustrate, right? If the sales tax, which is 6%, if that was increased to 6.08%, that would be enough to cover the cost of repealing the inheritance tax altogether. Right, that's like you buy a pair of shoes for $100 and you have to pay $6.08 in sales tax. That's enough to repeal this tax. So it's not a huge moneymaker. We could really repeal it without too much trouble at all. You could almost sneeze and all that money would fall out of the budget. I mean, it's really not very much. But importantly, the inheritance tax costs Marylanders money. Right, and the way it does that is it is an unjust tax against the poor, and it is an incentive to leave the state for the rich. Right, if you're poor, you cannot transfer property that you have inherited until you pay the inheritance tax. So if you have a $50,000 house that you have to pay inheritance tax on, that's a $5,000 tax. And you have to pay that, otherwise you cannot inherit this house, right? The inheritance that is yours, you cannot have until you pay this really absurd tax. And then the rich, they know about this tax. They know if they just go die somewhere else, then they don't have to pay it at all, right? But these people, the richest people who want to leave, those are the people we want to keep here so we can tax them until they die. Right. If they just stay here, they'll pay property taxes, income taxes, and sales taxes, and that's good, right? So we're scaring them away, and we're losing probably more revenue than we're getting by keeping the tax. Even if there were a significant financial cost to eliminating an unjust tax, it would be our duty to do so. But in this case, the cost is insignificant, especially in comparison to the cost of keeping it. So another issue with this tax is that it is the dedicated funding source for the Register of Wills, which is an elected office that is the government agency that you go to open an estate and inherit probate assets. So the Register of Wills is funded. 70% of their funding comes through this tax. And so there's this big political entanglement with the tax, right? If you get rid of the tax, you are reducing the fiscal autonomy of this elected official. And so even if the tax doesn't matter very much, politically it does. And that's a huge issue. But funding the Register of Wills with the inheritance tax doesn't make sense, and it isn't good. The amount of the inheritance tax is not correlated in any way with the expenses of that office. And it also reduces accountability and transparency for that government agency. Okay, and at this point, you still may not be convinced, right? You might think that we can just tweak it a little bit at the edges and we'll make it more fair. So let's say you did that, that you were intent on reforming it, not repealing it. So let's say you create a high exemption threshold based on the size of the estate, right? So it only taxes the rich. So then you eliminate the familial exemption so that you don't discriminate based on family composition. You modernize the tax so it's workable. You close the life insurance loophole. You have it administered by a centralized agency with tax administration expertise. If you did all that, you just have reinvented the Maryland estate tax, right? We already have that. We don't need to make it again. And none of that can fix some of the other deeper issues. So no matter what the state does, you have issues that are based in United States Supreme Court precedent, which limit the state's ability to tax transfers beyond its borders, right? And so if you have a rich person, they can always leave the state right before they die, and they pay nothing in state death taxes, right? Again, most states don't have any state death taxes. So it's really easy. You just go somewhere else. Beyond that, you can just spend 51% of your time in Florida and you won't pay any Maryland death taxes. Also, the Maryland inheritance tax is not paired with a gift tax. The federal estate tax is paired with a federal gift tax. And the point is that if you give away all your money right before you die, it should be taxed about the same as if you died with the money. State death taxes don't have this feature. So it's really easy to avoid if you just give all your money to an irrevocable trust and then die, right? You pay nothing because you didn't die with it, and there was no gift tax when you put it into that trust. So the Maryland inheritance tax, it needs to be repealed, and there's two things that so practical and political considerations about how to repeal it. First of all, it should be repealed in its entirety. Second of all, it should be repealed, and the statute of limitations should be a certain number of years after the person has died. Currently, the statute of limitations is 20 years after the tax has been calculated. So no matter how long ago they died, they'll still owe this tax even if we repeal it. But if it's a certain number of years after they die, then the tax will eventually go away forever, which has lots of practical administrative benefits. All right, so back to the Register of Wills. They need to be funded. They perform a core government service, but they should be funded like most other state agencies, which is through the budget. In 2000, the General Assembly tried to fund them through increased probate fees, and that died. In 2025, they tried to repeal the inheritance tax by increasing the Maryland estate tax. That died. That there is inherently an issue where you have to take away fiscal autonomy from this government agency that has in some ways had free reign over their budget. And so if you give them an appropriation through the budget, then you are taking away some power from them. But that's how almost all government agencies work. So it's really not asking too much of them. But this is the biggest snag in the issue. So the Maryland inheritance tax costs the wealthy nothing because it's a credit against the Maryland estate tax. It discriminates based on family composition by exempting an arbitrary list of legally recognized family relationships, and it funds only 0.12% of the state's budget. It continues to exist merely because of confusion and a lack of political will. If you're trying to advance justice but you're unwilling to pay for it, you are trying to make an omelet without cracking an egg. The last obstacle is to take away some fiscal autonomy from the Register of Wills. While this issue has shipwrecked the last two serious repeal attempts, it's the right thing to do. It'll take political capital, but it's the only viable solution. The inheritance tax is Maryland's fiscal appendix. It continues to exist simply because it does. And now it hurts. We feel the inflammation of injustice, but we're afraid to undergo the needed surgery. So we treat its symptoms. We create another exemption or another rule, but each time it adds administrative burden and reduces the fiscal relevance. It's time to cut out the appendix. It'll hurt for the moment, but we'll heal back stronger than before. Thanks for watching.